I look good as a cartoon, baby. What's up?
Today, we're going to be talking about real estate investing and development and the beginning stages of the process. We may have some cartoon little things up here on this side of the screen from time to time, but that's because I don't have my whiteboard with me today. And that's all right. Anyway, so if you are a newbie real estate professional who is interested in investing, who is interested in family wealth, who is interested in building your success to the point where when you are in your 40s, 50s, 60s, 70s, 80s, you just want to relax, you just want to travel, you want to have a good time with your life, you have a nest egg for you and your family. And the point is, overall, is to build a legacy. That's the key. Building your legacy, ladies and gentlemen. So, how do you begin? The question is, how do you begin? What is it that I have to do for me to get to that next level? What do you have to do to get yourself to that next level? Now, what I can tell you is that it's a process. You have to learn. You have to... it's a whole step-by-step process. So, very first thing that you have to do, and if you want, you can go back to my past videos where I give out free information about real estate investing, about agency requirements, all of that good stuff. But obviously, if you all know me by now, you know I don't go off paper. I go off straight off the head, okay? But so what you would want to do. This is the starting process, right? First thing you want to do is build your team. You would build your team. You would get your credit straight. Make sure your credit is right. You would develop a plan of action. You would then shop around. With the team that you have, you will shop around for agents. With the team that you have, you shop around for real estate in whatever neighborhood or market that you're looking for. Now, this is the thing. Different neighborhoods, different markets have different price points, different states, different price points. I would suggest you look in the closest location from where you live, number one. That way, if there's any emergencies, any problems with the property, you can head over there quickly and get things resolved, even if you have a management company working with you. So, real estate management is one of the team members that you will have, which is a manager. You will have a real estate attorney. No other attorney but the real estate attorney. Don't allow other people who are attorneys and other aspects of legal to tell you what is and what is not right in real estate unless they have a specialty in real estate law. And then you want an accountant and you need an assistant. So make sure you have those. And then you have your mortgage brokers and your, the banks and whatnot, your private investors who are going to help you in the process. Okay, so make sure you write that stuff down, please. Take a pen and paper, pause this, bring it back. Okay, I speak fast, sometimes I speak slow. It all depends, though. Okay, so the next thing you want to do in your process is check your credit. Go to Credit Karma if you have to, even though that's not as accurate as other sites are. It'll give you a roundabout number, so it'll be as close to what it is, what your score is. If you want it free, you can also go to freecreditscore.com, freecreditreport.com, and you could get that done. I think credit-wise, there's a lot of different credit companies. that you could go to help you out with that. Okay, if you've never done it before. What's that? Yeah, so you could go to Credit Karma. They'll give you your 3 bureau scores, and they'll give you enough information for you to be able to figure out whether you're doing well or you're doing bad, what you need to fix, what you don't need to fix. And then once you find out where you are with your credit, you have to learn the land, you have to learn the law of the land, okay? And understand, depending on your credit score and what's on your report will depend on what you have to do next. The other thing is, with real estate, if you're purchasing from a bank, you have to, I said it in my last video, sometimes I reiterate, but you definitely have to have 2 years of work history, unless you plan on using all cash, or an underwriter is going to give you all cash, or that kind of thing, without worrying about that. There's ways around it per se, but there's not. When you're dealing with the banks and the loan offices, they usually want you to have a minimum of 2 years W-2s, tax returns, and or if you're just getting out of college or about to graduate from college and head into the workforce, they would ask for your job's approval letter of employment with the salary and whatnot. Okay, so this you want to do that. The next step is, once you do that, you find out what your strategy is. So you find out what your strategy is. Your strategy is usually how many properties you're interested in purchasing, how much money you plan on making per year or per month, and how you're going to go about getting that done. Okay? The next thing I would suggest you to do is start a business. Okay, so you want to be able to protect your assets, protect your real estate, protect all these great things that you're about to invest in. Okay, so you want to get an S corporation and an LLC. My suggestion is get the LLC first as a business. This way, you get the highest tax deduction. The highest tax deductions. And you'll be able to put the real estate under the LLC through a quick claims deed, because sometimes when you're dealing with the brokerage firms, the banks, and so on and so forth, it'll be harder for you to purchase a property through the corporation when you don't really have any assets, you don't have any built equity, you know what I mean? Things like that. They want to see a track record. But if you put it in your name first, you could, once you put the deed in your name and you've purchased, gone through the closing, then you could do a quick claims deed and transfer it into the LLC. You want to also put a land trust on top of that. And you want to begin to build your business from that real estate. You want to rent the property out. You want to go ahead and maybe use it for Section 8, maybe use it for assisted living. You might want to just use it as a business. Some places allow you to do that. There are properties that have storefronts. So you have a 2-unit in a storefront. You have, if you're purchasing as residential and you plan on moving in and whatnot, you could live in one unit, rent out the other unit, and then start your business at the storefront. Or you could rent the storefront out, rent the unit out upstairs, and then live in the 3rd unit. So it all depends. But you, when you're out there looking for properties, you're looking for between 1 and 4 units. the thing is, when you're going through, the other thing is, remember when you're going through FHA, and you're looking for the 1 to 4 unit properties, they are really particular. So they, and not only that, the type of loan that you get will depend on the type of property that you purchase. So if it's a single family and it's already renovated and brand new, it'll be easier for you to get that property with FHA, through FHA. If you, because, and that's the reason, is because FHA has certain requirements in terms of renovation and whatnot. Now, what you could also do is get a renovation loan, but this is what I want to be clear on. If you get, do your due diligence, ladies and gentlemen, okay? Just make sure you do your due diligence. If you have questions, ask below. Also, go to a tax assessor that focuses on real estate. Speak to an attorney, a real estate attorney. These are your team members, okay? That way you'll know the law of the land, okay? You'll know what to do, what not to do, that kind of thing, okay? So remember, we're talking about investing now. You want to make sure that, so this is the difference. I lost track a little bit. When you get, with a renovation loan, so I'm going to give you an example of something that happened with me. I found a property that I was interested in purchasing. It was a 2-unit property in Jersey. It was a 2-unit property. It had 5 garages. It had a huge, what is it called? Like parking garage. The parking spaces were separate from the garages, and the garages were huge. There were 5 garages directly connected, and they were really long. So they were like, you could rent those garages out for like $100 a month per garage. Separate from that, you had enough parking space in your lot to even rent out parking for people in the neighborhood. Not only that, on top of that, you had 2 units, a 2-unit, one at the bottom, one at the top, and you had a basement that was, it wasn't a legal unit, it was not, and it was unfinished. So in my mind, I'm like, okay, so what I'll do is I'll finish the basement, I'll add a separate entrance to the basement, and then I would, it had windows, but I was going to expand the windows so that the windows would be able to open and close and so on and so forth, and then get an inspector to come in. That's the other thing, you need an inspector as well, okay? But, so this is what ended up happening. So I went through, I was able to get a government grant for that particular area, and the grant was up to $10,000. So it allowed me to use the $10,000 for closing costs and for what's it called? For closing costs and for and down payment. Right now, by this time, we already have the good faith deposit in. Which they wanted $3,000 for, which I felt was actually excessive personally. I mean, what are you going to do? Just hold my money? You know, like, come on. But the issue was when we did the inspection, mind you, inspections are like $500 a pop, right? So when we did the inspection, I paid $500. The inspector did his due diligence, and he found a couple of things that were problematic that need to be fixed. Inspectors always find something, but the main issue, it was one main thing. The roof was decent. It wasn't big. Like the property, people actually lived on a second floor, and like there really wasn't a big issue. The problem was, it wasn't a big issue for people to actually reside there. Like it wasn't detrimental, right? But it would have been. The bathroom on the second floor, had foundation issues, which what we found out through the renovation, through the inspection, was the floor itself was sinking in because of the weight of the tub, the weight of the sink, and the water seepage. So and then the tile. So whoever did the original renovation, when they put the tile in the bathroom, they put sticky tile. They didn't put actual marble tile. So, and that just only covered up basically just the wood and the foundation, the foundational wood that was underneath there. So what ended up happening was not only was the floor being pushed in, but the ceiling was caving in as well, because the light fixture, it wasn't a plastered ceiling. It was square. It was like square popcornish kind of ceiling. I forget the name of it, but the ceiling was actually falling through. So that was the main issue. That needed to be fixed. Otherwise, everything was fine. So FHA was not allowing us to purchase the property because of that bathroom. And then when we spoke about the renovation loan, because people give you options to do renovation loans, right? A 203K renovation loan, which is good. The problem was, because we were getting government funding for the closing costs and the down payment, they weren't allowing us to do that. With a renovation loan, you had to put down the down payment and the closing costs for this particular deal in order to get the renovation loan, which was the difference, right? It's like you couldn't put two and two together. Two deals in one. No, can't do that. That's too many deals. Like, come on, like hook me up. So we ended up backing out of the deal. Someone else purchased it. Awesome, congratulations. But the point that I want to make and be clear is that this is definitely a process. It will take you time to find exactly what it is that you're looking for. But when you get it, you'll know you have it, and you'll push that button, okay? So you definitely want to do that. Do your research, as much research. Do the comparables. Don't rely on your real estate agent to do these things for you, okay? Even though your real estate agent is on your team, their main goal is to sell you a property so they could get commission. They have other properties that they're trying to sell as well, but you are the expert as an investor in this relationship. So most real estate agents are not informed or well informed on the real estate investor side of the business. And I know from experience as a real estate agent, a newbie real estate agent in the beginning when I first started about 12 years ago, and I had no idea I thought I knew about real estate investing, but I had no idea until I actually started working with actual investors, and this is when I started to learn the process, and then worked with my uncle in Virginia and so on and so forth. So it's definitely more than what you think if you're a real estate agent. And my suggestion, I always suggest to real estate agents, is to study the investor market. Study what investors sell, purchase, the processes for purchase and sale for investors. Don't just be a real estate agent and all you're doing is walking around showing people beautiful homes or distressed homes, because sometimes you all do that too in New York. You have to be as professional as you can, right? Know the law of the land, know the taxation, know down payment, know what the closing cost is going to be, what the interest rate is going to be. Understand the whole, not the half, okay? So, a great strategy for you all to use as real estate investors is to get, you can get a 1 to 4 unit property, purchase that property under FHA if you're just beginning. You could also get a single family. The only thing with single families is with FHA, technically you're supposed to live in that property for 2 years. With any FHA, you're supposed to live in it for a minimum of 2 years, and then you could rent it out or sell it or what have you. But anything happens, anything can happen. An emergency could happen. It's your land, it's your property. You could move out. If there's an emergency, and if anybody asks, you just say it was an emergency. I had to move. That kind of thing. Not telling you, but if in any emergency situation, they can't force you to stay there. Is the point that I'm making. So what you would want to do is you would get. If you go to a great website to go to is biggerpockets.com. And they have a lot of information on different aspects of real estate as a whole. It'll definitely help you out there too. But you would get back to what we were talking about. You would get a 1 to 4 unit property to start. My suggestion is to get a 2 unit, 3 unit, or 4 unit, or a 2 unit and a storefront, or just a 2 unit. However you want to start, but just make sure you do the numbers. Make sure you do the after repair value of the property if it needs repairs. If it doesn't, if you make enough money in income to purchase a 2 unit property with FHA, then by all means. Some people run into situations where they may only make $40,000 or $50,000 a year, and will be capped at a loan of around $200,000. And if and you've done your research already, a $200,000 loan could get you a great single family home. But when you look at the two families and 3 families and 4 families, the properties begin to look a little shabby, and usually needs some work done. Or they're older properties and they may look nice, but within the walls they have some problems. Okay, so these are things that you may run into, or not may, but that you will run into. And then, let's be perfectly honest, they're more problematic properties than there are renovated nice properties in the city. There's nothing wrong with that, because you could make money off of fixing and flipping. So that's a whole nother story. But you would get the 1 to 4 unit property. You would take those properties, take the 2 unit property, and then you would rent out 1 floor, live in another floor. You could, if you purchase the property that already has equity in it, which means that you purchase the property under the actual appraised value of the property, you have the ability to refinance and get the difference out and use that money as another down payment for your next property, which technically could be a single family home if because what they do is they incorporate, whenever you purchase multifamily houses, they incorporate the rent the rent as income that you would get from the multifamily homes. And so you'll do that, and if you work a full-time job in the beginning, that incorporates your full-time job income plus the money you receive from rental income. You could take that, let the people live rent-free, let the renters pay your mortgage, and as this has happened, this is on your credit. This is increasing your credit over time, and this will then give you the opportunity to go ahead and purchase another property. You have what you could do is you could, by this time, you should be able to get business funding since you have a business, and utilize that funding to purchase more real estate in that particular neighborhood. My suggestion is to get property that are closely connected to one another in the beginning. This way, if any problems come about, you can go close enough to go to those properties. All right. You know what I'm going to start doing? I'm going to write it down. Maybe step by step. This way, what you guys can get to do, you guys can actually write this stuff down. the other thing is you may need multiple real estate agents. You may need multiple real estate agents to help you feel. The problem is a lot of real estate agents don't like working with people that work with multiple agents. They feel like wasting their time. And I understand where they're coming from. At the same time, you're trying to find the best property that you can. And what ends up happening is when you write an exclusive deal with the real estate agent and you work directly with them, you end up getting stuck with somebody who doesn't know what they're doing, who doesn't have the track record. This is why you have to do research. You have to really ask questions. Most of them, they're not even on that. Some are, some have experience working with investors. Anyway, so this is what I want you to do. This is what I want you to do. I want you to get a piece of paper. I want you to write down what you're going to do. Okay? Put goals at the top. At the bottom, I can put down how many properties you're purchasing. No, put how much money you shouldn't have to purchase. Okay? Throw a number out there. Write down what you expect to get. House in a certain neighborhood, car, if you want maid, butler, nanny for your children, and put all of that in there, right? Then I want you to research how much each of those things will cost. Okay? Write that down. And then what I want you to do is from there, I want you to go ahead and I want you to calculate how much you would need to make per property for you to get to that income level that you're interested in having. Okay, and then I want you to take the properties per unit, 2 unit, 3 unit, 4 unit, and do the calculations. Do the calculations on how much it's going to be. How much is rent going to be? How much would your mortgage be if you purchased a 2-unit property? Taxes, principal, insurance. So if you have to repair, what the after repair value is. And these are what you could do is for now, you could go to biggerpockets.com. They have a calculator, an analysis calculator that help you with that process. You can also go to jmorrison.com and he has that information. You can go to connect with Roberta. If you decide to sign up with her one-on-one, she has the information that'll help you out with that. What else? In terms of taxation and credit worthiness, you could go to Will Roundtree at We Management Services, WE Management Services. You can also pick up my book, The 90-Day Blitz, on Amazon. It's $7.99. 90-Day Blitz for newbie real estate professionals. You could just type in my name, Michael Razor, and it should definitely pop up. It's a red book. There are, in that book, I put websites to go to. I think I put links. This way it can help you all out, okay? What else? And you can email me if you want. It's up to you. You can email me, and I'd be happy to help you. The email is in the link. If you go to my Instagram page, you could click on the link on my Instagram page, and that'll take you directly to where you could send me a message, email me. And yeah, that's about it. What I'm going to do is the next video we're going to go over in more depth and detail. I just wanted to kind of put this video out there. I actually have a whiteboard that I was going to use today, but I couldn't I didn't have like the stick handle thing to hold it up, but that'll be done next time. All right. So you all have a wonderful day, and I'll be talking to you.